In this video, I'll show you how I made 12% gain on my accounts only trading liquidity and fair value gaps. I'll also show you how I was able to predict the market 2 days in a row in the Discord. This video will be putting everything together, so it's gonna guide you on how to take trades using all of the ICT concepts together. I'll help you to take some similar trades in the future. This is Molham and let's get into the video. Okay guys, the first thing that I want to say here, I don't want to set wrong expectation or higher expectation that every day I need to make 12% gain, right? So it doesn't happen every day. It only happens when I have that really high probability setup that I'm trusting and I've been waiting for a long time, and then I go perfect with the executions and I capitalize on that trade. So on this video, I did not make 12% on one trade. It was actually 3 trades, but they were all based on the same trade idea, right? Because I was trusting that one. I was waiting for it for a long time. And also I discussed this on the weekly seminar where we, look at the market outlook and the expectation of the market for the next week. So everything that I'm going to say here, we already discussed on the previous week on the Discord. Now taking a look at this, what I was expecting here, if we just go to the 4-hour first, or we could go to the monthly, right? So on the monthly time frame, we can see that what happened is price taken the previous monthly high, and now we know that since price got rejected from there, we have no other liquidity or drawn liquidity except the previous monthly low. So that's where we're expecting price to go after the rejection from that level. Now going to the weekly, we have the same story here. Looks like we gotta change the state delivery right here, and now we could buy above the weekly open of this and then start coming lower. Now going to the 4-hour, and that's where everything is going to be clear, right? So looking at the 4-hour, we had this structure right here. So we had already price coming lower. We closed below here. We were waiting for a retracement into this big range. And the levels that I was keeping an eye at, first of all, was this fair value gap here. And I was looking for a sweep above this high. However, it did not happen. Now, it doesn't mean that, okay, if price doesn't come here, the trade is invalid. It's just like, oh, price decided not to go all the way there, and I only decided to react of this order block. So we had this order block, price reacted from here, and then I did not participate on this. However, on the Discord, there are a lot of people who were participating on this trade. So there are people who entered this trade. However, I was waiting for some structure to be created here. Now price given a change in state delivery of this candle. So that was a huge candle going lower. I did not participate again on this. I was not able to find an entry. It was just too aggressive because I was also expecting this high to be taken and price come into this fair value gap. Because on the weekly, there is an inverse fair value gap being here. So now price did not go there. However, it was a reaction, a big one from the order block. So I was okay, we created a 4-hour fair value gap here. But it's a big probability that this one now is the smart money reversal. Now you see, we had this big range. We're coming higher to the internal range. To go where? Lower to the external low. A clear market maker's model. We had this original consolidation here, smart reversal, and then we're coming lower to take this low. This is what I was seeing at that moment. Now going to 15 minutes, I was waiting for the next day to start because that's where I'm gonna be looking for my trades, right? I always look for trades on London and New York. So let's see what happened. Price was, this is the Asian session, it started going lower. So it gives me more confidence that now, after the small money reversal, we could be going into premium or at least 50% of the range, which is at this fair value gap. And then we could go lower from there. So price started going higher. And I shared in the Discord at this point that my expectation, and as you can see in the picture, my expectation for the day is for price to go to where? Now, if we go to 1 hour, very quick, what do we see? This was our 4-hour fair value gap. We can see this is the low of the fair value gap. However, on the 1 hour, it's a clear high that is inside of the fair value gap. So this is my high probability setup. I'll be waiting for price to take this high to go lower. And also, looking at this, we see an overlapping here of this low of the breaker block. Now going to 15 minutes again, in order for price to go higher. Now thinking logic, price doesn't go like this to a level and then react immediately. To go from this point to this point, we need fuel in the market. What's the fuel of the market? It's liquidity. That's the use of liquidity here. So you see, we're using fair value gap here, nothing else, right? Fair value gap, and we're using liquidity. This is also a liquidity level. Now take a look at this. In order for price to go from here to here, it needs some liquidity on the way. So price going up, maybe creating a low, going higher, taking the low to grab some fuel to go higher to this point. That's what I was looking for. Now, a lot of people were saying like, okay, we need to go higher now. I was like, okay, we gotta take this low because that's the nearest low that is valid where a lot of people would put their stop losses at. Take that low, go higher. Also, what do we see below the low? So this was the low. What do we see below it? That's a clear fair value gap. So price could do two things, right? Get a fair value from this fair value gap as well as taking this liquidity. So I was expecting even the short-term move, which I'm gonna actually discuss on another video. We have two types of moves, and I'm gonna really go deep into that if you guys want. So come in here in order to go up here, in order to go lower. That was what I was seeing, right? And I sent this level on the Discord. Now take a look. Price was coming lower. I did not execute this one. Why? Because I was only looking for a specific level where I know that the big move and the big expansion move is gonna happen from. So you see, price started coming lower. We got a reaction from there. You see price not able to close below this fair value gap. Again, until we get this candle where we got a change in state delivery on the 15 minutes. Because we close above this candle, right? So we close above. Now we have an order block inside of a fair value gap. Was not able to go above this high until it took the liquidity, then started going higher. Now the time frame that I was executing on was the 1 minute. Going to the 1 minute, that's one trade of the three trades that I'm gonna go over, right? So I'm gonna discuss the first one. So you see, price going up. There was really nothing here that I can see. There was no change in state delivery, nothing. This is, you see, price started coming lower. Where's my last bullish candle? Now, I'm trusting the change in state delivery in this case. Why? And that's another thing that I'm gonna be discussing on the Turtle Soup full course. So make sure to stay tuned for that one. Now, why did I trust this change in state delivery in this case? Because we have a very specific level I'm looking at. That's a Turtle Soup entry. Now I'm trusting the change in state delivery. But if I had like a big fair value gap, there is no level, no specific one that I'm looking at. If you trade change in state delivery, you'll be trapped a lot of the time. So this was last bullish candle. Now we have another bullish candle here. Playing the price action. Took the high. Started coming lower, going up again. So there was no change in state delivery until when? This candle, this was my last bullish candle. And then we had a break and a closure below that last bullish candle. So in my opinion, that's a change in state delivery. Stop loss was a little bit above. I give some room for price to breathe here in order if it decided to take the high again and then start coming lower. Because even my target is too far. So I'm not going to go just like this and then maybe lose the trade. And my target is whatever, like all the way there. It's not worth it. So I give some room for price to breathe, about, I don't know, 3.8 pips, something like this. And then go into 15 minutes. And also the 4 hour, we can see that this was my target for the market makers model. This was a valid entry here in order to go where? Maybe another entry here to go all the way to the main target of the market maker sell model in this case. So this was the external liquidity on the 4 hour. That was my target. That's a huge target, I know. So price, what I targeted is this one right here. That's a 9-1, almost 9-1. So that was my first trade. And for sure, I took some partials, like almost 25% of the trade, I took it below those lows. Now let's play the price action. Price was coming lower, going lower, going lower. Now price is going there. Another trade that I took on EU was, I believe, this one right here. So what I'm going to do now is go over Euro USD and GBP USD, because what I use here in order to enter was an SMT. So if you have no idea about what SMT is, I'll make sure to post a video about it in the future. Now this is the second trade that I entered, and I was stacking trades here. Why? Because this was my whole idea for the whole week. So I knew that the expansion is going to happen here. Now only 0.5% bear trade. So overall, I was risking 1.5% of my account. Now take a look at this. This was the first trade. I'm going to drag it to the left and focus on what is happening now. You see, we had a fair value gap on the 15 minutes on EU. On GU, on the other hand, what happened, price was only coming to this fair value gap on EU. However, on GU, the same high that created that fair value gap was taken. So that's an SMT where we get a high taken here, but a high protected here. So that was an SMT that I was seeing very clearly. So from this to this, that's an SMT. Now, taking a look at the lower time frame, EU and GU, this was the SMT from those highs to here. Failure swing on EU as well as a liquidity sweep on GU. So what I've done is on EU, as soon as I get a change in state delivery, which was closing below this candle. That's a change in state delivery. I entered here. Now, change in state delivery without no context, without no confluences, it's going to be a huge loss, right? So I took a stop loss here and then targeting again the same target. It was my market maker sell model, external liquidity. Now, again, taking a look at GU, what happened is the creation of a liquidity sweep and then a change of state delivery on this, because that's the last bullish candle. We close below here. That's also another entry. Again, about 3 pips. What I targeted here is on the 15 minutes, we see that this was a clear target of GU. It was this low. Instead of targeting, because the condition here between EU and GU was a little bit different, so I did not aim for the same low, this one. And you see, until now, it's not taken. However, on EU, it was taken very clearly here, and I trusted the process. I waited overnight and I told everyone on the Discord that I'll be holding this and I trust the process. And then a lot of people were doubting here that we could be going bullish. A small move to the upside, and that's nothing but a short-term move. So I'm gonna again discuss this on another video, but that was only a retracement to where? Into an internal range liquidity to go lower to the external. It's another way of taking fuel of the market. So that's what happened. Again, the same trade here on GU, but it was targeting this low. That's another 8-1. Overall, that was about 12%, risking 0.5% on each trade. So that's how you predict the market all the time. So see, every day before taking any trade, what I do is go take a look at the 4 hour, see what is happening here. So what I'm expecting now is price to retrace up. That's going to be a market maker sell model here. Smart money reversal to go lower to this low. And you see the whole market is a move of external to internal, internal to external. And what is external to internal or the opposite? It's nothing but a market maker's model. So the whole market is always a market maker's buy model or sell model. It's always this cycle. Hopefully you learned something new from this video. It was a quick one just to go over the trades that I took. Simply a clear market maker's model, gotta take it. Make sure to like the video, leave a comment, and then share this video with your friends. Hopefully they learned something new. This was Mulham, and I'll see you in the next video.